Hi, thanks so much for joining in. You're watching NDTV Profit. My name is Mathew and this is Ask Profit. I'm joined by Smriti, Chaudhary, and we'll take you through the next half an hour or so of trade. This show is geared towards getting you answers to all of your stock-related questions, and to that end, if you've got those for us, you can send them on any one of our social media platforms, or in fact that number that you see flashing at the bottom of your screen. We have that WhatsApp number on our screens as well. Now, let's take a quick check of how the markets are faring right now, and you've got gains. Narrow gains at that, but the Nifty 50 gaining about 1/3% or so, and it's broadly a good day because the mid-cap index is also gaining about 0.4%, and the small-cap index is continuing its run higher, up as much as 0.9% right now. Of course, the global cues have been positive, and the Indian equity markets reacting to that. But there's one particular sector that has been buzzing, and the stocks in that have been running from high to high. I'm talking about the defense sector, and the reason is that there's a lot of interest and there's a lot of expectation that things will go from better to best for these companies if what the government has to say is anything to go by. We had the Defense Minister Rajnath Singh speak towards the end of last week about the potential for the exports of defense companies in India, and here's what he had to say.
जो हमारे पहले प्रायोरिटीज थी वही आगे भी हमारी प्रायोरिटीज रहेंगी, और भारत की अभेद्य सुरक्षा और साथ ही साथ भारत की अजेय सेना और हमारे सैनिकों का कल्याण, ये हमारी प्रायोरिटीज में विशेष रूप से शामिल है। यानी हम चाहते हैं कि सशक्त भारत का निर्माण हो, आत्मनिर्भर भारत का निर्माण हो, ये हमारा उद्देश्य है। और साथ ही साथ रक्षा उत्पाद में हम आत्मनिर्भर बने, ये सबसे बड़ा उद्देश्य हमारा है। और इस दिशा में एक मंजिल हम लोगों ने तय की है, और आप सब लोगों को मालूम है कि 21,000 करोड़ से अधिक का हम लोगों ने एक्सपोर्ट किया है, जो कि एक हिस्टोरिकल ये अचीवमेंट है। और मेरा तो टारगेट ये है कि इसको हम कम से कम 5 साल समाप्त होते होते 50,000 करोड़ से ऊपर ले जाएं, ये हमारा उद्देश्य है।
Right, that was Rajnath Singh talking about the potential in the defense space. And to elaborate on that, I'm joined by my colleague Anushi. Anushi, we're seeing these defense stocks run up. From the last year itself, we've seen these stocks on a high, and now that has increased. The pace has increased now, especially after the defense minister spoke. Tell us about what's happening there and what's the potential from here on.
Hey, so I'll just start off with how the comments have led to this defense stock rally that we have been seeing in the last few sessions. So Defense Minister Rajnath Singh, as mentioned, he has targeted about 50,000 crore of defense exports by 28 to 29. Now, again, they are emphasizing on further strengthening in their domestic defense manufacturing. Even if we pull out FY24's domestic defense exports, that stood at about 21,000 crore, representing about 32.5% of a growth coming in this side, with private sector contributing to 60% of the growth that we are looking at. But even if we go back 4 to 5 years, see the kind of growth in FY21, 8,400 crore of defense exports. Now this has grown to about 3x in just these FY21 to FY24 itself, about 21,000 crore as mentioned, and now they are further targeting about more than 50,000 crore in FY28 to 29 going forward. So that remains on a strong foothold for companies catering on the defense export side. Just to get a brief sense also on the government defense spending over the years, 6.21 lakh crore of allocation in the budget. Now that was about 18% of growth, while if we go back a previous fiscal above that, 9% growth. Now the top defense players have continued to benefit. We are seeing strong up moves in stocks like HAL, Paris Defense and others in trade today, about 5 to 10% of returns. Coming just to the order book side, HAL has about 94,000 crore of an order book at the end of 24. That showcased about 15% growth. BEL and BEL also locked in about 25 to 38% of growth on the order book side at the end of fiscal, and have some strong outlook going forward for FY25 as well. Coming to how the stocks have performed in this last 1 week and 1 year period. So in this 1 week itself, we are seeing up to 27% of return. Meanwhile, in the 1 year period, we are seeing returns for key players like HAL, Garden Reach, BEL, clocking in about over 100% of growth coming from this side. So strong outlook for defense sector in general, and we will continue to see how this pans out in terms of opportunities and exports going forward for the business.
Good point. Thanks so much, Anushi, for getting us those details and for laying the context. On that note, let's get our experts on board. We've got Astha Jain, Senior Research Analyst at HAL Securities, and Swati Hodkar, AVP Technical Research at Nirmal Bang. Thank you so much to the both of you for taking the time, for joining us. I was looking at the index, the defense index, not widely tracked, Astha, but as a whole, this index with 15 constituents has gained about 160% over the last 12 months or so, which is incredible to say the least. The question is, how much potential upside is there from this point, and should you be buying? If so, which names?
Hi, good afternoon. Talking about, first of all, this counter, yes, the India's defense sector is at the inflection point, and what we are seeing that now, the Indian defense market has expanded a lot. It is, I should say, by 2025, it should be $25 billion market, and out of that, $5 billion can be attributed to exports. And if I talk about 2022 itself, so India ranked as a top 26th defense exporting country in all 86 countries. So now India is at the inflection point, and definitely what we are seeing that unprecedented rise in the defense stocks across the board. So yes, I think the sector has already witnessed a huge rally, but there are certain pockets where I think the rally is still, I think we can see rally there. And out of that, MTAR Technologies is looking very strong to us. So yes, MTAR Technologies is the one stock in which we are positive, although BEL and BEML is also looking good to us. But if I talk about that, somewhere the rally has still not gained that momentum. So that stock or that place is MTAR Technology. We are recommending buy on this counter with a price target of somewhere at around 2,400. So, and with a disclaimer that this stock we might have in our portfolio also.
All right, understood. Let's start off with the queries now. The first one is from Sundar Bhatt, who's writing in from Mysuru. And they're talking about the counter India Hotel. They've bought at 613 rupees a piece. It's up in trade today, up over 1%, close to 620 rupees. So I think I'm going to come to you on this one. Would you suggest holding on to this counter from a short to medium term perspective?
Smriti, the counter is really looking positive on the technical front. Daily charts suggest that the stock has given the breakout of the flat pattern, trading nearby its all-time high level, but more upside can be seen, at least up to 640 will be the first target, and about at level 660 can be seen. Since currently the buying price nearby the CMP, so I will suggest to take hold the long positions by maintaining a strict stop loss of 605 for immediate target of 640 and 660 on level.
Okay. We've got a question coming in from Tulsi, and Tulsi is asking about a couple of counters, Power Grid Corporation of India and Canara Bank. She's not really mentioned a time frame, so I'm going to go back to you, Swati, on the charts. Would this be a good opportunity to buy? And if you have bought, would you hold on to these two counters?
See, regarding the Power Grid, definitely you can hold on this particular counter because the chart is really positive. The stock is trading in upward rising channel. Also, the interesting fact that on continuously basis, it's testing the trend line supports and just moving ahead on the north side directions. I believe that it has a very strong potential to reach up to at least 350 levels, which is the previous swing highs and all-time high as well. So 350 is the likely target. Any move above that level, 370 can be seen. So as long as this particular stock holds 310 levels, immediate support provided by its 20 days moving average. So by maintaining that stop loss 310, one should definitely hold for a long positions. Regarding the Can Bank, yes, this particular bank is really doing not much good compared to the another bank. I will suggest don't take a long position in the Canara Bank, but definitely one can go for the SBI or the Federal or the Bank of Baroda Bank. Those counters are really doing very well compared to this particular counter. So I will not suggest a fresh long positions in the Canara Bank, but definitely one can go for the another mentioned stocks.
All right, fair point. The next counter is GMR Infra. This one's from Divya, who's writing in from New Delhi. The question is, should you buy a GMR Infra at the current price? Now, Asa, from a longer term perspective, brokerages have now initiated coverage and are very, very positive on this counter. What's your take on this?
Yes, in fact, we are also very much positive on GMR. And talking about this counter, we are also recommending buy on this counter. The way the infrastructure story is taking place in the India, I think GMR Infra is one of the counter which is well placed to cater those opportunities in the sector. Apart from that, the infrastructure theme is gaining the momentum and the company is continuing seeing a strong demand there with a strong order book also. In fact, in the last results also, we have seen somewhat improvement in the margin. So going ahead also, we are expecting the trajectory to continue. GMR Infra is looking strong to us, recommending buy on this counter with a price target of 105 to 110 at the current juncture.
Okay, Asta, I'm coming back to you on Coal India. We've got a question from Ludhiana, and this is Mohit writing in. He's bought at levels of 152, 500 shares he's got of Coal India, and he's looking at a time horizon of about 2 years. Now, the question is, would you hold on? Because he's got significant gains already. Would you book a little bit at this point? And what are the prospects, considering that we're still looking at a massive increase in demand for power, and thermal power is going to be the predominant source for power going forward as well?
Sure. And apart from that, there is one major focus point of this company is its valuation. Being a PSU might be is a possibility that valuations are not still that stretched, because I think it is quoting somewhere at around 8 PE multiple. So PE multiple of 8 is looking reasonable at current juncture with the strong bottom line growth of around 32%, which we have witnessed in the Q4 of FY24. So I think reasonable valuations along with a strong performance in the financial with the industry tailwind, everything is well poised for this counter to move ahead. Recommending a buy as well as hold on this counter. Initial price target can be set at around 530 levels.
Right. Asta, the next question is also on power stocks. This one's from Sumit, who's writing in from Qatar. They've bought Tata Power, Adani Power and NTPC. The question is, do you merge your holdings into one or two stocks, or would you keep holding on to 3 of them?
So I think all 3 of them have their own positives and negatives. So we are recommending holding all 3 of them rather than consolidating them into one, because we are very much positive on this power story. So now talking about NTPC, Tata Power, first of all, very strong performance, because if I take out the other items or the exceptional gains which they have shown in the last year's Q4 of FY23, then there is a strong jump in the bottom line in Q4 of FY24. So Tata Power has shown very strong financial performance. Recommending a hold on this counter with a price target of 480 to 500 at the initial levels. Talking about NTPC being a PSU company, we have already seen the kind of demand this stock is getting. And with a strong financial performance, although Q4 was not that very strong, but going ahead, we are expecting this counter to move ahead with a strong financial performance as well. So recommending a buy as well as hold on this counter as well with a price target of 400 to 410 at the current juncture. Adani Power, we don't track this counter as much, so I'm not really able to comment on that counter. But the other 2 counters are looking very strong, recommending buy as well as hold on both of the counters of NTPC and Tata Power.
Okay. All right. The next question is coming to you, Swati, and this is on HAL, Hindustan Aeronautics, which we discussed at the start of the program, but I didn't come to you on this. Praveen Kumar from Palakkad in Kerala is asking whether it can be bought at the current price, and what a run this has had, right? 5% higher today, but look at the year-to-date performance of this company, and even the last 12 months, it's moved from high to high. The question is, would you buy at the current market price? There is a significant risk of it coming off, but will you call the top?
Alex, definitely the counter is really doing very well on the technical front. On every week, we are witnessing a new high on this particular stock. But at the current juncture, the risk-reward ratio is not favorable. You have correctly pointed out. I will suggest to wait for a time being. If the market corrects in the next week, as I'm expecting some correction, or say the profit booking. So whenever the stock gets a deep towards to 5,000 to 4,800 levels, one can definitely go for the long positions, but not at the current market price. Definitely, I'm looking for a target of 6,000 levels in this particular stock. But I will suggest to just wait and watch. If we are getting any dips towards to 4,800, definitely one can add on in their portfolio.
Coming back to you, Swati, this one's from Ashwin from West Bengal. This is on Markson's Pharma. They bought the counter at a price of 156 rupees. It's currently slightly above that, but it hasn't done too much in the last 6 months or so. Would you suggest holding on or book whatever profits you have in this counter?
See, Smriti, this particular counter is just moving slowly and steadily. But if you look over on a larger degree frame on the monthly chart, you have rightly pointed out that in the last 6 months, the stock has not given a much performance, but it is consolidating within the range of 150 to 170 levels. That 20 points momentum got stuck. If the stock manages to give the breakout of a 170 levels, definitely we are going to hit a new high towards at least 185 to 200 levels on the high side. So I will suggest, as long as the capital is not required, definitely one can hold on. If possible, maintain the strict stop loss of a 152. I am looking for a target of 180 will be the initial target, and about that level 200 can be seen.
All right, Astha and Swati, stay with us. It's time for a short break, but we'll be back and we'll take more questions on the other side.
Welcome back. You're watching Ask Profit, and this next question is an interesting one because this is something that a lot of people think. Siddhant Sharma has got a question. He's asking for stock suggestions with a ticket price or the share price of between 100 and 200 rupees. The reason that he's asking for this specific price point is so that he can accumulate a larger number of shares rather than a stock that is maybe in the thousands of rupees where he can accumulate less number. Now, just a quick point here before I take it to the expert. It's not necessarily a good measure of the expense of the cost of the stock. Take Nestle, for example. Before the split, it was trading at over 27,000 rupees per share. And after the stock split, it is now trading at 2,500 rupees per share. So the question to ask is, has the stock gotten more expensive or has it become cheaper? The answer is effectively neither. The stock is available at the same price because as a multiple of earnings, it's not really changed. The number of shares has changed. So with that context, let me go to you, Astha. Do you still have any stocks that you can suggest from the fundamental standpoint which are easy to accumulate in large numbers and still have good fundamentals?
I think not in the 100 to 200, but yes, slightly above 200, which is Tex Macro rate. So I think between 100 to 200 range we can attribute because it is 213. So Texmaco rate is looking strong to us. So it falls in the category of which this investor is really interested in buying. The ticket size is around there only. Talking about this counter, first of all, strong financial performance. And railway, as we all know, it is on the radar of the government. So definitely we are expecting some strong measures on the railway front in the coming budget. As well as if I talk about their wagon production, so they have reached a very strong high because this company is now producing the wagons of around 800, which was their target previously. So I think and financial performance was very strong. CAGR growth of 50%, bottom line growth of more than 100%. This is what they have posted in their financial performance in the year gone by. So Texmaco Rail is looking strong to us, and whatever you have said, that is true, that you should not measure the performance by the ticket size or something like that. But still, if someone is interested in this type of ticket size, then Texmaco Rail is strong counter with a price target of 240 to 250. One can buy this counter.
A fair point, very well explained by Alex. And if you still want to buy the stock, Asta has suggested one for you. The next one is Noida Toll. That's the name of the company, Noida Toll Bridge. And the question is from Shashikant Kore. The question is, should you buy at this from a 1-year perspective? Swati, I'm going to come to you from slightly longer perspective. 1 year, the stock has doubled in the last 1 year. Do you see more upside to this counter?
Yes, definitely upside can be seen in this particular counter, but currently the stock is trading in an overbought zone since we have seen one side momentum from almost 8 levels to now 14. So I will suggest to hold on if you're getting any dips towards between 10 to 12 levels. Definitely one can hold on, one can go for a long positions. Major breakout comes at around 15 to 16 levels, which break that level, then we are likely to witness a new rally which might take a counter towards 25 levels. So one can hold, just keep an eye on it. If you're getting any dips towards 12 rupees, definitely one can go for a long position.
Okay, the next question is coming in from Satya. Satya is asking about Avantel. Avantel is a network solutions provider as far as I can see. And he's bought at levels of 115. It's now trading higher at 180 or thereabouts. It's up and about in trade today as well. But he's asking about a fundamental view. He's looking for the next 1 to 2 years. He's asking, is there an opportunity, Asta, to book profits at this juncture and move to something that is from a different sector? And he's identified Lumax Auto as a potential counter to buy right now.
So, Alex, I'm sorry, I don't track both the counters, Avantel as well as Lumax Auto, so really difficult for me to.
No, that's not. That's not a problem. Swati, can I request you to pull up the charts for these two? He's making profits in Avantel, so the question is, should you book out and move to something like a Lumax Auto? And the perspective is for the next 1 to 2 years, so not a short-term time frame.
See, Alex, this particular Avantel really looks very positive on this particular counter. And as of now, it just has started its rally. The stock has given the breakout of a 140 level, which was the cluster resistance level of the previous history. And now the volumes are really increasing along with the price momentum. So whenever such kind of a structure forms, I believe the stock has a potential to reach up to 200 to 240 levels. So one should hold its long position since the buying price is from the lower end. So as long as this particular counter holds the support of a 160 levels, you can hold your long positions for immediate target of 200. No need to switch to the another stock. Hold this particular counter itself.
Just a quick follow-up, since Captain Harinder Singh from Moradabad is asking, should it be bought at this current price?
Alex, I will suggest to hold on for a particular time being. If you're getting any dips towards between 140 to 130 level, then one can definitely go for the long price. But not at the current market rate because the risk reward is not favorable. We have seen a very good momentum within the span of a 3 to 4 trading session. So hold on for a time being. Any dips towards to 130, definitely you can go for a long.
So Ati, coming back to you on another counter, it's ISMT. This one's from Lavish from Indore. They bought the counter at a slightly higher price of 133 rupees. It's done well in the last 6 months, but seems to be on a bit of a downtrend. Would you suggest holding on to this? And do you have any particular target on this counter?
See, ISMT as of now, it is in a sideways or say the consolidation phase. within the range of 120 to 135 levels. Slowly and steadily, the stock is moving ahead. In the last 2 months, we have seen a very good rally from almost 90 to 135, 137 levels. So the profit booking cannot be denied at the higher levels. So as of now, we are just witnessing a very short-term correction or say the sideways momentum, which might take a counter towards 210 to 115 levels. So there is no major reversal from the higher side. I will suggest to hold on by maintaining a stop loss of 115. Once the stocks manages to give a breakout or say the consolidate above 130 levels on the closing basis, at least for 1 to 2 trading session, then definitely we are going to witness a swift move towards to 150 to 160 levels. So it's a hold from my end.
Okay, short to medium term outlook is being sought on Angel One. This is a counter that Sunil from Hyderabad has bought at levels of 2,839. Asta, I know that you would not normally talk about fundamentals, but I think a large part of what is driving the stock up is in fact the fundamentals. And so therefore, would you suggest holding on from a medium-term time frame?
Yes, because 2,800 to 3,000 is the ultimate price target which we are giving to this counter, so maybe very near to cost price. So he will have the opportunity to exit at the cost price or a minor profit. Talking about the fundamentals of this counter, capital market outlook is major focus point for this whole sector or for this whole company, I should say. So yes, capital market outlook is very strong. They have a robust orders, and I think going ahead also orders from trading clients. This is what I'm talking about, because they have got a substantial increase in the number of clients also. So definitely increase in the client will lead to increase in the number of orders. So I think, and financial performance is already very strong. So if we club all these factors together, it leads to a higher stock price from here, and definitely we can see 2,800, which is his stock cost price, as well as 3,000 can also be seen on this counter in the medium term.
All right, that was the last question for today. Thank you so much, Astha and Swati, for joining in and for answering those questions for us. Viewers, thanks for tuning in on this edition of Ask Profit. We'll take more queries tomorrow, and keep writing to us. You have our social media WhatsApp number and social media pages, so do keep writing to us and we'll take your queries. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
Hello and welcome. This is NDTV Profit, and on the big story today, we take up the Hyundai IPO. Well, from what we understand at the moment is that it probably hits the markets over the course of the next 2 months, but there's plenty that we need to discuss even as it comes on board. And this is, of course, keeping into mind the current circumstances and the current environment under which significantly large auto companies already run. And in the listed space, of course, we're taking into account Maruti Suzuki as well as Tata Motors, keeping Hyundai IPO in mind. But with me, I also have my colleague Sajid Mangat, who's going to, help us guide this conversation along, of course, with my colleagues Puneet as well as Tushar. Of course, but starting off, let's start off with, Sajid, what are we tracking and what are we going to talk about in today's show?
The filing of the prospectus of Hyundai has brought the spotlight back to the auto sector. We've seen some rally happening in some of the auto stocks like Tata Motors and others in 2023 and going into 24. But what is more important is the kind of expansion this sector is going to see, and not only from an investor's point of view but also from the point of view of capex. So a rough calculation I was looking at, between Hyundai, Tata Motors and other companies, nearly $10 billion of capex is going to come in the next 2 to 3 years in this sector alone. That means the kind of expansion that's coming in, especially led by electric vehicles, which is there. And Hyundai IPO not only brings the focus back on here because it expands the auto sector, and so the investment coming from global funds into it. But it's an auto IPO coming after 20 years in this market, and would perhaps be one of the largest IPO after LIC.
Well, so that's of course what we're going to talk about. But let's start off with the basics and let's talk about the size and let's get in Tushar in the conversation. Tushar, what are we keeping an eye on right at the top?
So we are essentially looking at, as what Sajid mentioned, was the size of the IPO is comparable to that of the LIC, which means we're looking at India's biggest IPO potentially.
Right.
On offer are 142 million shares out of a total of 820 million shares. That's equivalent to 17.5% stake in the company. What we have heard from sources is the valuation of the company can be anywhere between $25 billion to $30 billion.
Right.
But how big is Hyundai, so to speak, in terms of financials? In terms of revenue, Maruti Suzuki is actually double the size of Hyundai in India at this point of time, in excess of 1 lakh crore rupees last year. But Hyundai made about 52,000 crore in the 9 months that's been specified in the DRHP. The EBITDA margin that Maruti Suzuki enjoys is 8.92%. Comparatively, Hyundai is much better there at 9.1%. Again, these are the 9-month figures of FY24. Net profit is 9,536 crores as compared to 4,382 crores. In terms of operating metrics, sales, production, as well as exports, Maruti produces a significantly high, about 20 lakh units every last year, as compared to Hyundai's nearly 8 lakh units. Domestic sales for Maruti Suzuki were close to 18 lakh units. Comparatively, is about a third for Hyundai at about 6.15 lakh units. Exports, again, Maruti beat Hyundai, 2.8 lakh units for Maruti, as compared to about 1.65 lakh units for Hyundai.
Right. Well, I guess the next question then naturally comes down to the valuations. Puneet, what can you tell us here?
Yeah, well, we look at other details as well when we include, Hyundai, as well as looking at how it compares to someone like a Maruti Suzuki as well. So we did speak on volumes of roughly 7,77,000 for someone like a Hyundai. Maruti had roughly 21.3 lakh units sold, so roughly 3 times that. But when we see the margin picture, that's very interesting because EBITDA margins, when we include, when we exclude the other income component, because Maruti has higher other income, we see that EBITDA margins were roughly 12.7% for Hyundai for, the 9 months that we spoke about in the DRHP. When we also look at, the share, EBITDA share for Maruti was roughly 11.6. So 110 basis point higher EBITDA margins for someone like a Hyundai. When you look at the PAT margins, here is where the differential comes in, where someone like a Maruti has higher profitability compared to Hyundai, and now that is because of three major reasons. When we look at something like a depreciation to PPE, which is how much the company has been depreciating on its assets, that is much higher for someone like a Hyundai, at roughly 26.5%, as you can see on the screen, was someone like a Maruti is just around 17%. The other part is, which we spoke about, the other income. Now that is the key, positive for Maruti. It's a very big cash generating unit, and we see that roughly around 22% is other income compared to PBT, while 19% is for Hyundai. And finally, on the tax also, Hyundai pays higher taxes in India currently. We'll see how it goes forward, but those are a couple of key data points which lead to higher profitability for Maruti.
So given the fact that now the size of the company in terms of sales which is there, in terms of number of units that they sell, how will you compare it with Maruti?
So when we essentially look at just the overall valuation picture of both the companies, we do see that Maruti is currently 4 times the net worth of someone like a Hyundai in India, roughly at around 80,000 crores. When we look at the ROE picture as well, that's also a very important aspect on the investments that Hyundai has gotten. That's roughly 22% for someone like a Hyundai, as you can see, versus 15% for Maruti currently. And the other 3 key ratios which you can see on total market cap of the company, essentially, for Hyundai, right now it's at a higher price because the profits are a little lower for Hyundai, and that's why you can see that 45 times for Hyundai versus 30 times. But essentially on valuations, EV by EBITDA is also higher, while market cap to revenue, which is the price to sales essentially, is slightly higher when we compare it to FY24 numbers. But going forward, the picture does look very promising going ahead as well. We will be seeing new launches, which Tushar will talk about. But the valuation, as perceived earlier, that it's going to be extremely expensive and at a premium valuation to Maruti, that might not be the case essentially. And as we deep down into more of these topics, we will see why is that the case.
So you mentioned about market cap to sales, ratio for Maruti at 3. So given that market cap to sales is around 3 for Maruti, and we assume the same multiple for Hyundai, what are we getting as a market cap for Hyundai?
So essentially, when we look at the market cap, as you rightly said, if we just take and extrapolate that to the numbers going forward as well, just taking the ratio of 3, we get a rough market cap of roughly 2 lakh crores. And how do they get to this number? We will get into that. But essentially, the price to share currently, this is just based on the assumption of what we have in the DRHP as well as on public domain. The share price comes around the 2,500 odd rupee mark, and we will come back to how the valuation picture comes back, detailing more into exports and other metrics as well. Yes. But essentially, the PE ratio is around 36 times on the current FY24 metrics. Now, I want to get back into the certain metrics that you also wanted to highlight.
Actually, before we move on, and since we are talking about valuations, the other aspect that we need to consider here is growth. You're saying that Hyundai most likely could be ascribed a higher valuation as compared to Maruti or Suzuki in general. That means that I'm assuming that, the margins are better off than Maruti, 100 basis points, but 100 basis points is not a very large difference. In that case, do you think that Hyundai's growth is superior to Maruti, or it has been over the past couple of years?
I think one important factor that we look at is, of course, the vehicle sales and how it's translating into financials. Yeah. Now, for sales, you've seen that roughly 25% of total volumes are currently in the export market for Hyundai, and that isn't the case. Like Maruti is around 10 to 11%. So they have become, India has become one of the hubs to, look at regions like Southeast Asia as well as other Asian countries. When we see that, EBITDA margins are also higher for Hyundai currently, it is actually coming at a profitability of more units. And one last point that I wanted to highlight was the 60% of the sales in the domestic market is currently coming from the SUV space. So that is also a key point, because the average selling price is going higher for someone like a Hyundai, which also benefits the company in profitability as well as adding new regions. So you've seen that something like a Middle East and Europe has almost doubled from the share back in FY22. It's gone to 12% of sales now. So they are including newer regions as well as not coming at the cost of profitability. So they are exporting a lot more as well, and that should aid margins going forward as well.
Tushar, come in here. Market share of Hyundai versus some of the other players like Maruti or Tata Motors or a Mahindra. How is it faring there?
So essentially, as the IPO has come in now, the number 2 position that Hyundai has held for the past decade or so it's for it to protect. It has to defend this market share going ahead because Tata Motors is close on its heels. So over the last 5 years, Tata Motors has grown its market share from a 5% into the FY19 to 14% now. Yeah. If you look at as on 31st March, Maruti Suzuki was comfortable at 41.71%. Hyundai was at about 14.5% and Tata Motors was 13.8%. So we are seeing that Tata Motors and Hyundai are very close, so to speak. So once it becomes an Indian company, as an Indian listed company, that's number 2 position is what Hyundai has to protect rather than going for chasing Maruti. Right. Secondly, you have to push up exports because those are better margins. The other point is, of course, how the transition strategy that Hyundai has taken at this point of time. It's actually 3-pronged. So first is, of course, premiumization. About 67% of the sales are from the SUV space. They are better equipped in terms of technology, 6 airbags standard, so that's a good selling point, so to speak, something that Maruti has so far shied away from. So those things are working in favor of Hyundai. Again, like how it's becoming the export base. We remember that there is some amount of pushback for Chinese electric cars abroad, in Europe as well as US. So that's one gap that's opened up for Hyundai to fill going ahead in the EV space as well.
What about sub 10 lakhs cars? Because
that's a very interesting point.
That's a big
That's
area.
about a 49% market share in overall sales, in sales volume in India. So in that space, Hyundai has sedans, hatchbacks, SUVs, all of them. So we have a Grand i10, we have the i20, best-selling, the first premium hatchback to actually come into India. We have the Venue, we have the Exter. So between all shapes and sizes, the best-selling car that Hyundai has, the money maker, so to speak, is the Creta, which lies in the 11 to 20 lakh price bracket. That's where all the volumes come in. That's where the company makes its margins. Above 20 lakhs, we have the Alcazar, which is a multi-purpose vehicle, which is a 7-seater. Not so many volumes, but given how Hyundai is focused on SUVs, or an Alcazar, a Creta, an Exter, a Venue, all do their part in delivering those SUV volumes.
Right. Well, there's plenty of, conversation left around here, and we're running out of time, so we'll quickly run through maybe just 1 or 2 points more. Puneet, very quickly, a share on exports, because that's something that even Tushar touched upon.
Yeah, I think we did speak about a little bit that currently roughly 25% of total volumes for Hyundai is coming from the export market. We've seen that India currently, of course, is the largest share, but they have been expanding their market share, as Tushar highlighted, in Europe, in Middle East as well. The share has gone up doubly, while for something like a Latin America, they have maintained market share. So exports is, of course, a big focus market for someone like a Hyundai. And within India as well, we have seen that, as we spoke about the compact SUV space, where there wasn't much players until Mahindra with the 3XO. That's a 6 lakh unit per year market. So that's a huge market where they have high market share as well, which is getting in newer first-time buyers as well who want something bigger than a smaller car. And this Exter and the Venue fits perfectly there. As well as the exports, the margins, of course, are much better for the company, and it's becoming a global hub right here from India to service other nations as well.
What is the EV play here, Tushar?
So the EV play here is that Hyundai is not selling as many electric cars as it would want. Right. Tata is way better at that level, and it's a future technology. We are moving towards that. So that's where Hyundai has to play catch up, and it has plans to do that. Right. So right now it has 2 cars, the Ioniq 5 as well as the Kona, which are very well above 25 lakh market. But as per the DRHP, there'll be 4 EVs that are coming very soon. One of them is a mass market product, as well as an electrified version of the best-selling Creta. That is due, I think, in Q4 of FY25. So, yes, they have lined up. It's, again, for Tata Motors' market share to lose, so to speak, when competition from Hyundai comes in, competition from Mahindra and Mahindra comes in, because they also have an aggressive battery electric lineup ready for them.
Right.
So, the big question which everyone is asking, will it be expensive, right, Puneet? So, can you give us an idea of how expensive will it be compared to Maruti or a Tamo?
So when you look at the current numbers, of course, we spoke about the higher, the higher depreciation and the lower profitability. So the current P ratio does cover around the 36 times for someone like a Hyundai versus 29 times for a Maruti Suzuki. But going forward, we might see some more changes in this particular manner. We will see how the company performs in this particular way. The other thing is that going forward, like PE is a forward-looking metric. 2 years down the line, we will be seeing, of course, the Maruti EV also coming in, but Hyundai is already present there. They've already seen what the market is, and they have a lot of products gaps that are already filled with the compact SUV, with this. So we did have, as we spoke about, the back of the run calculation of roughly 2 lakh crores of market cap. This is an assumption of $25 billion of valuation for the company. We do come at roughly 2,500 per share, but we will wait for the company to come out with much more details on the price band as well as how much are they raising in total. And finally, just one thing that I wanted to highlight, that Maruti Suzuki currently in India, which listed a couple of decades ago, the valuations are 50% higher to their global parent in Japan. Currently, Hyundai is coming at half of the valuation of their global parent. So it'd be very important to see how finally over the next few years, and this is much of a long-term story, what happens finally with Hyundai, how it gets accepted in the market, because the global play, of course, is one of the most important things, but the domestic market, where India is becoming such a big market, and by FY30 we are expected to have 70 lakh cars sold in India from roughly 40 lakhs now. Right. So it'll be a very important aspect for Hyundai getting listed here in India.
Okay, well, we've covered a lot of ground, and I'm sure there'll be plenty more to cover over the course of the next few weeks, even as we get more details with respect to the valuations on the Hyundai IPO. But on behalf of Sajid and me, thanking both Tushar and Puneet for joining us and giving us a lot of insights there with respect to the latest in the auto sector. On that note, we slip into a short break, and on the other side, we continue the conversation with plenty more on Hot Money. Stay tuned in. Welcome back. This is Hot Money. We get into the conversation. Raghvendra Kedia is the founder of Prosperity Advisors.